What's up, guys? In today's video we're going to be talking about General Electric stock, where I think the stock will go in 2020 and beyond into the next decade. But before I talk about GE stock, I want to remind you guys to smash the subscribe button, because I'm going to be posting videos like this on GE, other popular stocks that you might own on Robinhood and some other apps. And I want you guys to receive notifications by simply turning on the notifications bell so you receive an email notification anytime I post a new video. So what's going on with GE stock? There's been a lot of changes within the company. They have a new CEO lately, and he's just completed just over a year under the helm. And the stock is actually, after being beaten down for a very long time, GE stock, as you can see here, is down quite a bit over the last 5 years. So the stock is actually down over 54%. So if you've been holding on to GE shares over the long term, you've been getting crushed. But ever since the new CEO has taken over, there has been a bit of promise in the company. If you just held on and were patient, or actually bought at this recent dip, as you can see, GE stock is actually up 61% on the year. So you've kind of been rewarded if you've been a patient investor here. The stock was trading at some ridiculously low levels earlier in the year, around $7, and now we're sitting at about $11.27 as I record this video. So where is GE stock going to go? Well, one of the reasons why I made this video is because GE stock is one of the most popular stocks held on Robinhood, and I like to do a lot of research using a website called Robin Tracks to find stocks. Not only to trade myself personally, but I actually use this to find ideas for the YouTube channel as well. So as I mentioned earlier, the website called robintrack.net, a really nice site for finding kind of not only lots of different trading ideas, also use it for YouTube videos. As you can see, GE stock is the #3rd most popular stock held on the Robinhood app. Almost 300,000 people are currently holding this stock. So I thought it'd be a great time to do a YouTube video and just talk a little bit about this company and where I think it's going to go in the 2020, in the next decade and beyond. So let's just get right into it, guys. Where I like to start is I don't like to make assumptions on charts and things like that. I like to go right into the latest quarterly report, because that's giving you basically a straight from the mouth opinion on the company straight from the CEO. So let's just head over to that. You can find all of this information if you simply go to ge.com, investor relations. So as we can see here, one of the biggest problems with GE recently is that the company isn't really growing as much. They're so big, and a large cap conglomerate like this, they're involved in so many different businesses. Perhaps they kind of have the problem of a lack of focus, and that's one of the things that I'm hoping that the new CEO and chairman, Larry Culp Jr, can fix as we move into the next year. So he wrote recently in his latest quarterly. So he wrote in his latest quarterly report, "Our results reflect another quarter of progress in the transformation of GE. We are encouraged by our strong backlog, organic growth, margin expansion, and positive cash trajectory amidst global macro uncertainty. We raised our industrial free cash flow outlook again, even with external headwinds from 737 MAX and tariffs. And we're holding our adjusted earnings per share outlook despite reduced income from moving Baker Hughes to discontinued operations." So basically what's going on with GE, and as I've kind of gleaned from reading the latest quarterly report, is that I think they're, like I said, I mentioned a few minutes earlier, I think they're dealing with this, they're not focused. So their business is so diversified. Their income is coming from many different sources. So I just want to quickly show you guys kind of how their revenue is coming from. So if you aren't familiar, they're in basically 4 different segments. They're into power, renewable energy, aviation, healthcare, and then they also have their GE Capital platform as well. That doesn't generate nearly as much revenue as the other 4 the other 4 income streams. But what's going on here is, you can take a look a little bit later. There's a lot of data here, so I'm just going to go right down to where they break it down by earnings based on segment. So here we go. So if we look at their revenue based on segment, we can quickly take a look to see where GE is generating the majority of their revenue. So as we can see, 9 months ending September 30th, 2019, 13 billion in power, 10 billion in renewable energy, 23 billion in aviation, and 14 billion in healthcare. So as you can see, the money is coming from so many different places. They're not focused, and that's one of the reasons why they're struggling to grow revenue. Whereas if you take example, maybe a company like Apple or a company like Amazon, most of their revenue is only coming from one or two core segments. So it's making it a lot easier for those companies to grow their revenue, whereas a company like GE, they're lacking focus. So one of the things that I gleaned from the report is that one of the positives is that unfortunately they're losing money on a lot of different fronts. So as you can see here, revenue is really decreasing. So like I said, you know, they've been losing money in GE Capital. They suffered some losses this year in their renewable energy. And like I said, you know, it's just there's so many different moving parts coming on that, as you can see here, in terms of power, revenue is down. So the only kind of bright positive that I saw is a big boost in renewable energy. So, you know, over the year, the 22% boost in orders and revenue is up 10%. And we know that renewable energy is going to be a big revenue generator for all of these energy companies in the future, as we're transitioning from burning coal and kind of gas guzzling vehicles in terms of factors and things like that, moving towards solar energy that's much more renewable and much cleaner for the environment. So the companies that are taking advantage of solar energy, which is a huge growth, and I'm actually going to make some future videos on my favorite solar stocks. I got a few that I've been looking at, but that's one of the things that I noticed. So I think GE can definitely improve that. And the aviation, you know, that was very troubling for the company with the whole 337 MAX and all, you know, those crashes and things like that. So I'm not surprised that part of the business is kind of flat. But what the really thing about GE is that not only is the business so diversified and revenue has been very sluggish, is I want to show you guys another thing that a lot of people might not be aware of, and that is the number of shares outstanding. So I use an awesome site in a lot of my videos. It's called macrotrends.net. It kind of gives you a visualization of what's going on. So if you take a look at General Electric, the company has 8.73 billion shares outstanding. That's a ton of shares. It's probably I have never in my life seen a company with that many shares outstanding. So the company is massively diluted. So we're dealing with a company that's struggling to grow revenue, and it's massively diluted as well. So as you can see here, for a while there, they were reducing the shares outstanding. But ever since the new CEO has taken over, Larry Culp, we've seen an increase in shares outstanding. So there's kind of a balancing act here. We want to see those numbers go down, because to have 8 billion shares outstanding, it's heavy dilution, and that's going to make it a lot harder for the stock to go to $20, $50, $100, which is what we want to see with our investments. We'd like to see, you know, each share that we own grow. So I want to show you guys some more numbers about how revenue has basically been flat for quite some time. And here's some more numbers from macrotrends.net as well. As you can see, from 2014 to 2018, the revenue has been stuck in between the 113 billion and 121 billion range. It's actually been decreasing quite a bit from what the revenue was in 2007, 2008, 2011. These have been when other stocks, mostly in the tech sector and things like that, explode. So people are kind of shying away from GE shares. But I want to show some positive things about the new CEO. And a company like GE, I think it really on who's running the company, because obviously the company's it's been around for it's been around for well over 100 years. So they need decent leadership, not only to help increase revenue and bring the company profitable again, because the company's been unprofitable for a few years or so, but they need someone to change with the times. And I think that's what big companies like this, they have trouble changing with the times, because the way they made money in the past isn't necessarily going to be exactly the same way they're making money in the future. So I want to talk about their new CEO, Larry Culp. So I've been doing some so who is Larry Culp? Well, Larry Culp is actually the first CEO to run GE that was not from within the company. They brought this guy in the company. They're a conglomerate. And as you can guys quickly, the stock chart for Danaher Corporation while Larry was running. So he previously ran Danaher Corporation, and as you can see here, he was at the company for quite some time. So I believe he was CEO of the company from 2000 to 2014. So we can take a look here at what he did for shareholders. Took over the company at around, let's say around $10, about $10 to $12 per share. And when he left the company, his shares were selling for around 50 to 60 bucks. So he basically increased the stock price, helped increase the stock price 5 to 6 fold. Did a pretty good job of returning value to shareholders. And as you can see here, the stock's been on quite a run up. So a company that I actually was not familiar with until actually recording this video, but a Fortune 500 company, and a pretty nice company as well. I'll probably make a video on this one separately because I haven't heard too many people mentioning it, but taking a look at the long-term shareholder return is absolutely phenomenal. But I digress a bit. So back to Larry Culp. So we see he's had experience dealing with big companies and returning value to shareholders. And this guy has a bachelor's in economics from Washington College and an MBA from Harvard Business School. So he has plenty of experience, in dealing with big companies and returning value to shareholders. So I think that's one of the reasons why Wall Street and investors like you and me are interested in GE, because we're just waiting to see somebody bring in some fresh new ideas and some new leadership on where to move the company. So one of the things I also like to look for is I like to look for a CEO that puts his money where his mouth is. So one of the things I want to show you guys is that Larry Culp himself, a couple months ago, I believe it was back in August, you can see here that there was quite a bit of insight, some key executives in the company, namely Larry Culp Jr. I'll show you guys how I find this information. You can just go to Google and type in something like GE Insider Activities, NASDAQ.com, like I do. There's lots of websites we like activities because we want CEOs to be buying the stock in the company, especially if we feel like it's at a decent price, because this is an extremely bullish signal. Usually stocks that are bought heavily by insiders go on for big gains well into the future within the next 3, 6, and even 12 months. Something that investors like to see, and I like to see it as well. So I'm going to just show you guys quickly the insider trading activity. Okay, so we can see here on August 12, 2019, he picked up 300,000 shares at $9. Another director bought directly, another officer. So right around that, for about a heavy insider buying there, right around at the $9 to $8 range. There was a lot of heavy, and then he bought again, $7.93. So the stock is up quite a bit from those levels now, but that's a good long-term signal, because obviously if he's going to be picking up that many shares, and he has over 1 million shares himself. So as you can see here, shares held is 1.1 million. That's a great signal, and that's just something we want to see. We want to see the insiders buying the company stock. We don't want them to see that. We don't want to see them dumping the stock. So that's kind of saying around $8. They felt it was too cheap. So now the stock is not at $8. That trading was done about 4 months ago since recording this video. So a lot of that insider buying was at right around this level. So we're up quite a bit from there, and the stock has kind of been just hovering around this, $11 to around $10 to high $10, low $11 range. So the stock's been hovering. So where is the stock, can it go in the future? Well, one of the things that we want to see with this company is we want to see the CEO, definitely focus. So I think if they focus on their core business models and continue to sell away and divest from those non-core businesses, that will really help GE focus. And like I showed you guys earlier, there's a lot of shares outstanding. We would like to see the shares outstanding as well. So let's just take a look at some of these other numbers we see here. The company is actually under $100 billion market cap with a 388 price over earnings ratio and quite a low dividend. So for you guys out there that are dividend growth investors, you're probably not going to find too much value in GE stock. I'm going to show you guys quickly some of the numbers over on dividend.com. So if you're new to this channel, I use dividend.com to research most of dividend paying stocks. Yes, General Electric, they do pay a dividend, but it's not very high. It's only 4 cents a year. That's 1 cent per quarter. And there isn't any dividend growth here. So they're just desperately trying to hang on to the dividend. As you can see here, we recently passed the ex-dividend date, and the dividend is a penny per share. So if you're interested in dividend growth investing, I'm going to be posting more videos on that. It's basically around building a dividend portfolio for stocks that continue to raise the dividend year after year. You're not going to really find that with GE. This company has definitely been struggling over the past 5 years or so, and we're very desperate when they hired their new CEO to kind of turn things around. So I wouldn't really necessarily recommend this stock for the dividend. I think you're investing in GE if you think they can just basically become profitable in the future and just have a complete change in the way they do business and kind of get away from the whole diversified model and focus. And I think a lot of the focus should be on, according to their numbers, the most, the segment with the most, seemed like the biggest growth was renewable energy. And we know that's definitely going to be something to talk about in the future. So that's it for guys. That's my video on General Electric. Where do I think the stock will be in the next 5 years? Well, for me, this is definitely a wait and see approach. Usually when I'm buying a stock, I'm either buying a stock that I think can either grow their earnings at least 10 to 20% year over year in the future, or I'm looking for a dividend growth stock that can simply pay me that dividend and I can just pocket the dividend into my retirement account. So this General Electric, it doesn't really fit either of those check boxes for me. For me, this is a wait and see approach. If I were to trade this, I would probably use long-term call options. I know some of you guys out there maybe bought it right when the CEO bought it, so you guys are sitting up on a quite a nice gain. Maybe you're wondering, should I hold on to my shares? Should I sell them? Like I said, I'm not a financial advisor, but I don't see any problems with holding on to the shares. Like I said, the CEO did some heavy buying a couple months ago, so obviously he knows more about the company than anybody else does, and sure knows a lot more than we do. So I think this could be a hold. Let's wait and see what's going to happen with General Electric. The most important thing for me would be for them to reduce the number of shares outstanding. There's just too many, and that's one of the reasons why I'm just not so interested in this stock right now. I think there's a lot of other more interesting companies. I talked about some of them recently. I'm more interested in companies like Netflix. I'm more interested in Realty Income. Even Aurora Cannabis, I'm more interested in those opportunities than General Electric right now. So just let me know what you guys think about General Electric stock, what you guys plan to do, or you think it's a good time to buy. Do you think it's a good time to sell shares? Are you holding? Are you trading options? Just let me know what you guys are thinking and thoughts. And also, if you want me to talk about any future companies or stocks in the future video, just let me know in the comments as well. I read all the comments you guys leave. I really appreciate it, and your comments really help kind of shape and mold the course of this channel. I'm making these videos for you to answer your questions and to make content on stocks that you find interesting. I'm not just picking random companies here. I'm going through Robinhood. I'm reading comments on other people's channels, and I'm trying to make videos on stocks that I think either you're holding or thinking about holding or have some questions and would like some more insight into. So that's it, guys. Thank you for watching. Please smash the subscribe button because I'm going to be posting more videos like this on a regular basis where you can kind of get an overview of the company and see some things you like, some things you don't like. And also hit the like button because it really helps my channel. It really helps more and more people discover my content and help grow and mold the channel as I move into the next decade, guys. So, 2020 is approaching, and this will be one of my last videos in 2019. So I really thank you guys for watching and thank everything you do, and I hope you guys have a great new year. And until next time, guys, stay safe and take care.